Okay, there ArcelorMittal speaking to ArcelorMittal chairman speaking to NDTV. Meanwhile, Godrej Consumer has reported a good set of numbers despite the pressure being faced by a lot of the consumer goods, a lot of those FMCG companies. Let's go across to Mithali, who joins us with the details and analysis of those numbers. Mithali, it's over to you.
Yes,
tell us what's good about those numbers.
Well, the numbers pretty much beat estimates. Top line growth came in close to 32.5% at around 1,323 crores. The bottom line grew close to 22% at 192 crores. Now, the soap sales was primarily that led the growth. Volume growth was approximately 17%. Even the gross margins improved close to 200 basis points, and EBITDA margins also increased 140 basis points. Even the international business is something that performed pretty well. Margin expansion was despite higher ad spends and staff costs. Even Megasari, that's the international acquisition, that has increased close to 30% with an EBITDA margin for it at close to 20%. Even their overall net working capital has increased by 290 crores. Also, let's listen to what Adi Godrej has to say on these good set of numbers.
Despite commodity increases, our profits have grown considerably over last year. And we have taken price increases as required. We have improved efficiency in many cases. So this is par for the course, and we don't think it will affect us next year.
And also the numbers for the other FMCG company, Dabur, was announced. And Mithali, tell us what's good about those numbers, and are they feeling the heat of inflation?
Well, Dabur on the top line and the bottom line faced were a good set of numbers, but we could probably, if you see the margin recovery was not very significant. We were expecting margin expansion at 17% versus 19%, but they came in 16% versus 19%. Basically, gross margins have been a challenge for the company. The company did state input cost pressures as one of the reasons. If you see, inputs related to crude have been significantly high, so that's causing one of the dampeners on the margin front for Dabur. Also, if you see, there was an increase in branding and advertisement costs, and the ad sales came in close to 13% of the sales. The management did say that they're going to continue with this kind of run rate going forward also. For the next quarter, FY13, the management has given an outlook of almost 10% volume growth, and also has said that the next quarter we could see some kind of margin hit, but post that we could see a margin recovery. Let's listen to Mr. Sunil Diggal and let's hear what he has to say.
In the console, we've shown a top line growth of 23%, and the breakup is 12 volume, 7 price, and 3 translation gains. That's for the consolidated. For the domestic, it's been around close to 20%, 19.5%, and it's been half and half, around 9.5% each volume and price.
Thanks a lot, Mithali. Thanks for the update on those two numbers. Key FMCG companies there seeing some bit of pressure, certainly with their numbers. And also Dabur saying that they're going to increase prices as well very shortly. That's the bad news part of it. But that's all the time we have on the show. Thank you so much for watching. Coming up is Buy Sell and